So the focal point here, the yield curve. For Chris, let's chat with Gareth Soloway to take us into the bell, Chief Market Strategist at InTheMoneyStocks.com. Gareth, good to see you again.
Good to see you too. Thanks for having me on.
All right, what's the top of your list right now? Yield curve, stocks, Bitcoin? What are you most excited about? What are you trading the most?
Well, usually Bitcoin's the volatile one, but it's gone to sleep recently. It certainly is the dollar, the yields, and really the stock market. I mean, we're having 2% plus moves in the stock market every single day. That's absolutely remarkable, especially when you think back. Remember when the VIX was back at 8 or 9? I mean, here we are at 30 plus for an extended period of time.
Yeah, pretty amazing how that's been so sticky up here. Do you have a bias on which way it's likely to break? Because if it breaks higher, that's like only in crisis mode. VIX 40, VIX 50, that's like COVID or black swan type stuff. So are we more likely to drift lower, or do you think we are going to get hit with another big surprise whammy?
Yeah, so according to everything I'm seeing is you're going to have a little relief rally here over the next couple weeks going into the midterm elections, and then I do expect another wave down in the market. So I do think that we're going to see a pretty sharp move to the downside coming into year end. I think the VIX does get above 40 as the economy slips into a very visible recession.
So the awareness that we are really breaking down fundamentally, economically, you think will be the next shoe to drop?
Yeah, so for me, it's basically the economy slipping into a recession, but then looking to the Fed and saying, okay, Fed, you've bailed us out every time in the past. Can you start lowering interest rates or printing money via QE? And the Fed's going to look back and say, hey, guys, unless we're in a depression, we're not printing money because inflation is still elevated. And the realization of that for the stock market, for investors, is going to be really an earth-shattering moment. And I think that's going to kickstart a bigger move to the downside in the equity markets. Well, I think we test 3,000 on the S&P by mid-year 2023.
You know, I was looking at the chart of Tesla earlier. 3,000 for the S&P 500 is below the pre-COVID high from the Jan 2020, but at about 33.75. So your 3,000 would, of course, mean we go through that level. If that happens to Tesla, Tesla trades at $60. Is that an outlandish notion, Gareth?
It's not as outlandish as you think. I mean, again, I almost saw like a little bit of a panic in Elon Musk yesterday when he talked about the combination of Apple and Saudi Aramco being Tesla being bigger than that. To me, when you have to say stuff like that, it's kind of like, we're getting into a tricky period in the stock in the company's future. And I do think that, again, that's a bearish sign. So I think that Tesla, again, my target right now by end of year is about 170. And then I think by 2023, you'll see that 137 to 140 level, which is a major gap fill on the charts. Like you said, if we go down to 3,000, you could be talking sub 100 on Tesla.
Wow. So how will we know when the market is in this moment of realization that the Fed's not going to bail them out? Will we still see bonds selling off in that type of moment? Or will we get to a juncture where the economic deterioration is so severe people start buying bonds again? Because it looks like today, I mean, hey, Japan, they can't even sell bonds. Nobody bought their bonds today. Are we going to get to that point? I mean, it's like it's getting pretty ugly here.
It is getting very ugly. And I do worry that the Fed is breaking the global financial system by continuing to just stick to this hard-nosed approach. So I do think, again, that you have to worry about what's going on with the pound, what's going on with the euro, and really the dollar yen is just an insane chart. So I do think that, again, the markets are going to kind of go through this period of, okay, the Fed is pivoting. This is great news. We're going to have a relief rally. But then the economy continues to slow. And remember that during COVID, people didn't travel. They didn't drive cars as much. So there was a lot of savings. They paid down credit cards, all that stuff. So that savings is carrying us through right now. The issue that I'm seeing is when that money runs out, the economy takes a cliff dive by mid next year. And I think that's something the Fed's not necessarily seeing. Just like they said it was transitory and it wasn't, we now have this new scenario that they're misjudging.
Okay, so rates screaming higher right now. As you mentioned, the kind of intermediate term, potentially a bounce that then becomes a sellable opportunity in the end of the year. What's the best way to play this? Is it to own equities broadly? Are there particular areas that you think?
I have your back guys in my audio here. I don't know if they can cut that out. But could you
Gareth's
repeat
ear,
the question?
We got to talk S&P levels. Get out of his ear. Hey, we got 2 minutes. Hopefully you can hear me, Gareth. We'll try again. We got about 2 minutes till the bell. What's the best way to play, you think, this potential for a little firming up of the market before that year-end fade?
Yeah, so I'm looking at buying beaten down tech stocks. I think that, again, when you get that relief rally, the dollar is going to be the culprit, meaning it's going to be dropping. I think the dollar yen, I'm actually long the yen right now based on the fact that I do think this 150 level on the dollar yen is a reversal short-term play. So I'm looking at that as a good opportunity. And then I think, again, like I said, tech stocks that have been beaten up here, look at how, in all fairness, like Zoom was trading really, really well today early in the day, and I think is still positive. Look at the semiconductors today. They're even in a kind of a nasty reversal market. They're actually still holding on to some gains. So you're starting to see the little tidbits of positivity. And I would go to those areas that have been beaten up, but are showing relative strength in a down market today.
Okay. That's a good point, Chips here, up by about 0.5%. Where are you on Bitcoin right now? Are you steering clear, or does that qualify as a tech stock too?
No, I mean, basically it is a tech stock right now. Hopefully in the future it goes away from that. But the bottom line is, with Bitcoin, you have this macro bearish pattern. So I still think there's further downside. But kind of like the markets, I expect if tech stocks are going to near-term bounce, you'll probably get this near-term pop and then a bigger reversal to the downside maybe later this year. All
right, a pop and a drop into the end of the year. Gareth, thanks for the outline.
Thank you so much.
Glad we got you. Gareth Soloway, Chief Market Strategist at InTheMoneyStocks.com.